week's precious metals market update. We'll wait Thursday when the Department of Commerce comes out with their quarterly and annual forecast on the economy. And of course, this could drive any market, stock, bonds, up, down, gold, silver, up, down. But it's always interesting every year to come in and see the Department of Commerce give these numbers for their estimate. Seems like over the year it means nothing, but the initial reaction to it always seems positive or negative. And I bring this up because I've had two conversations the last 2 days with two money managers, and one of them thinks the numbers are going to hurt the stock market, and one of them thinks it's going to help the stock market. And I always find that interesting when you're talking to people that professionally manage money for a living, and yet they're on different sides of the pole. Which brings me to the business that I'm in, and that's gold and silver, platinum, palladium. But it's the same thing. You have people asking me, this ratio now of gold 85 to 1, and when's it going to drop back to the 50 range where it was for so many years, where gold is 50 times more valuable than silver. And so it's got to go back. So should I just keep buying silver? And of course, we talk about this a lot, but because some of the questions I got via the internet this week, I want to touch on it again, since there are people that still don't hear it. Gold is money. Gold is money. Central banks buy gold. They settle accounts in gold. Central banks bought more gold last year than any time in world history, over 630 tons. Any financial crisis or problem in the future, gold will be part of the settlement, part of the resolution, part of everything. So you look at it, banks don't buy silver. Silver is driven in industrial demand. We see solar panels in China, solar panels in California that have to be mandated now. We see the electric car becoming more popular, and the expected growth in the next 10 years will bring demand to silver. So you have an industrial demand, but what is lacking in the silver market is the investor. We've seen some huge sales in our company in the past few months, but they're all gold sales. People doing what central banks are doing because central banks know what they're doing. So are you doing what central banks are doing? Are you out doing something else? You should be doing part of what central banks are doing, and that is building up their gold supply and their gold assets as fast as they can, because they know, and China's buying it, and China's the one that's probably going to lead what may end up being a yuan-backed gold currency or some kind of gold-backed currency. So you've got to look at that. So hopefully you'll understand that silver is driven by industrial demand. Over 50% of the silver sold annually is for industrial uses, and about 45% for investors. But when that turns, more people can afford silver. That's when you see the big catch up, when you see it come up to that 50 ratio. Gold can still be going up a little bit, but silver's going up a lot faster. We've seen it in 1980. We saw it in 2000 to 2011 and 12, and we're going to see it again. How far off is it? Nobody knows. So you're smart to keep adding silver, but you're also smart to get into gold, because at some point, gold's going to get pegged at a huge price for world economies. And it could be, some people think as little as 5,000, others think 16 to 30,000 an ounce. For a metal right now, that's $1,330 an ounce, basically. But we have a lot of special deals right now in gold. I mean, incredible deals. So, if you're interested in talking about it, you can always reach us at 800-247-2812. That's 800-247-2812. I've touched on the Department of Commerce numbers. I've touched on the gold and silver, and the buy signal I gave here to this show about 6 weeks ago now, 8 weeks. we've seen platinum go from 756 to 825, where I gave another buy signal. Now we see it at 858 as I do this show, and we still see palladium hitting new highs. And as I've told you, once palladium mining starts back in Siberia and Russia in about 6 or 8 weeks, when the tundra thaws and they get in there, you're going to see these palladium prices drop, in my opinion. And if you're still holding and made 4 or 5, or some of you even made, over 4.5 times your money on my palladium buy signals from 2011, 12, and 15. So get into platinum early, because it's already been a metal that's been to 2,000 per ounce. And the best way to buy it's in bars, COMEX bars, because you make money off the premium as well as the price of platinum going up. You don't find deals in platinum like you do gold. The cost of making it's 46 times more rare than gold as far as known deposits worldwide. So you should have a mixture of gold, silver, and platinum right now in my portfolio. That's what I have. I've sold all my palladium. I'm not going to have time this week to get in, but hopefully next week I'll try to visit an asset allocation question from a listener about what else to put your money in beside gold and silver and stocks and bonds. And I'll try to visit that next week as someone that's been in the investment business since 1972 and started this company in 1976. So hopefully we've covered the questions we got this week with the silver, the gold, the ratios, the central bank, the Department of Commerce's figures coming out tomorrow on the 28th of February as I record this on the 27th. And once again, if you're not getting our emails, you can go and sign up for those on ftmdaily.com under ftmdaily/gold. And we never share anybody's email with anybody. It'll be strictly, you'll get things from us. But anyway, if you want to talk to us about anything we talked about, you can reach us at 800-247-2812. And that includes talking about self-directed gold IRAs. And we can be your representative and your broker. We cannot be set the account up for you, so you'll need a custodian for that, but we can give you a couple of those. So once again, this is Tom Cloud with this week's Precious Metals Market Update, signing out.